A Investment Limited is an investment company whereby it has started the company with a paid up share capital of 2 crores. Further, it has pooled money from its various investors, shareholders, and around 10 crores. Totally 12 crores was invested in the market. The purpose of this company was to invest in the various securities of other companies, and whatever capital appreciation happens, profit happens, they would like to distribute the profit or capital appreciation to these various people. That was the whole intention of this particular company. They want to distribute the capital across all these people, all these various people. It has to be distributed. Now, in this case, the capital has to be distributed to various people, and that's the thing actually here. So now, in such case, actually here, the capital has to be distributed. The profit has to be distributed in the form of dividend to all the investors. Whether the provisions of preparation of consolidated financial statement is applicable to this company, please explain. This is the question which is coming from May 25 revision test paper RTP. It's a very interesting question. Now, in this case, if you read section 129 subsection 3 of Companies Act 2013, where a company has got one or more subsidiary, associates and joint venture, it has to prepare a consolidated financial statement along with its own standalone financial statement. A consolidated financial statement of the company and its subsidiary, associates and joint venture has to be prepared as a single unit or single entity. Section 129 subsection 6 of the Companies Act, what it highlights is that the central government on its own will exempt a certain class of companies from the preparation of CFS, that is consolidated financial statement. And one of the type of those company is nothing but the investment entity. Now, when I say investment entity, what exactly is an investment entity? Investment entity is one which obtains funds from one or more investors for the purpose of providing those investors with the investment management services. So the investors will give the money to the investment entity and it will provide an option for the investment. It commits to its investors that its business purpose is to invest solely for returns from capital appreciation, investment income, or both. So here intention is what come on both capital appreciation, investment income. So it is to earn return from either capital appreciation, investment income, or both. So it measures and evaluates the performance of substantially of all the investments on fair value basis. So first of all, the valuation of investment is done on a fair value basis. Second one is that they have invested money for the purpose of capital appreciation or investment income, and mainly they provide investment management services to the investor. So in the above case also, the valuation of the investment was done on a fair valuation basis. The investment entity need not present consolidated financial statement as required by para 31 of Ind AS 110 to measure all its subsidiary on fair value through profit or loss. A parent shall determine whether it is an investment entity. So as per para 33 of Ind AS 110 consolidated financial statement, parent of an investment entity shall consolidate all its entity that it controls, including those controlled through investment entity subsidiary, unless the parent itself is an investment entity. So for example, suppose there is a parent company which is a parent of an investment entity. They will consolidate all the entities it controls, including those controlled through investment entities. The investment entity need not prepare CFS, but the parent of the investment entity are required to prepare the CFS, even all those entities which are controlled by the investment entity subsidiary. Unless parent, it's also an investment entity. So in this case, in the above case, actually what happens, the investment limited, which is fulfilling all the conditions, so they are pooling the money, they are making investments, they are investing for capital appreciation or investment income, and the Valuation is done on a fair valuation basis. So by applying the requirement of, like say, a para 31 and 33 of Ind AS 110, in this case the above company is an investment entity, and hence there is no require to prepare a consolidated financial statement under section 129 subsection 3 of the Companies Act. Okay, so they have to gauge a question, ask a question, that are they an investment entity. So this is from May 25 RTP. Thank you very much.